Good morning, all. Welcome to the morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing key sectors and stocks that we should be focusing on. Now, hawkish Fed FOMC policy, crude oil prices sustaining at elevated levels, and dollar index moving above 105.50. Now, all these reasons have led to acceleration of profit booking in Nifty as well as Bank Nifty on Thursday. And for the third day running, we have seen both the indices close negative. Now, HDFC Bank and Reliance had already started the fall since the last few days, and yesterday we saw even ICICI Bank joining these two stocks and adding to the pressure. Bank Nifty closed 1.6% negative, while we saw Nifty closing 0.8% negative, mainly on account of the outperformance from the IT sector, with stocks such as Infosys, TCS, and Tech Mahindra supporting the markets from sliding further. Even stocks like Bharti Airtel and Larsen supported the markets yesterday. Now, lot of listeners would have this query about HDFC Bank. Now, if we see HDFC Bank, despite the selling pressure in the last 2-3 days, where the stock has sold off, uh, it is trading in a 10 to 12% range from December 2022. So till date now, if we see, the stock has been trading between 1530 and 1700 levels, and so I don't feel that there is any cause of worry from a long term investor standpoint. But yes, definitely from a short term perspective, the trend has weakened, and this is impacting the Bank Nifty. So from a short term trader standpoint, since it has slipped below its 200 DMA, as well as it is sustaining below its 20-day exponential moving average. Now all these levels are between 1605 and 1630. So till the time the stock is not able to recover beyond these levels, I feel there could be selling pressure witnessed in this stock, and trend could be weaker. On the downside, 1500 could act as a strong support, being the lower end of the trading range. Now, coming to Nifty, the key support zone would be around 19500, which is the prior resistance. Now, this was the prior resistance for the entire August month. Now, remember, friends, a lot of times in the August month we had discussed that the index is taking support at 19200 250 levels and bouncing off till 19500 550. So that was the resistance in for the entire month of August. Now, while we have crossed that, retested 20,200, on the way down, the same level of 19,500, 19,550 will act as a key support. And I feel the index is approaching that zone, and the buying support could be witnessed around this zone once. So 19,500, 19,550 should be on our radar as an important support level. On the upside, the key resistance level would now be around 19,900, 19,950 levels, above which we will see the trend strengthening up to 20,150, 20,200 levels. So all in all, 19,500 important support, 19,900, 19,950 would act as an important resistance. Coming to Bank Nifty has witnessed severe selling pressure, and this could be gauged from the fact that the up move from 44,800 to 46,300 took 6 sessions, and the subsequent down move just happened in less than 3 sessions. Now, key support for Bank Nifty would be around 44,000, 43,950 zone, as multiple times indices have taken support from this level in August 2023 before it started its journey towards the 46,300 levels. So once again, this zone could act as a demand zone. 43,950, 44,000, 44,100 kind of zone, this 150 point zone could act as an important support. So we feel that the Bank Nifty could take support around this zone, and key hurdle now would be 44,950, 45,000 on the way up. So until and unless these levels are not crossed, we might not see big bang positional bullishness in Bank Nifty, and we may see the index trading in a range between 44,000 and 45,000 for the next few sessions. Above 45,000, 45,050, we could see the Bank Nifty recovering back up to 45,500 and higher levels. But let us take one level at a time. and work with this levels of 44,000 as a support and 45,000 45,050 as a resistance. If we see the option chain, significant open interest buildup is witnessed in 44,500 puts and 45,000 calls, which means if we adjust the premiums of both these strikes of calls and puts, the support zone could be around 44,200 on the downside and the resistance could be around 45,100 on the upside. Now, if we observe the FII data, FIIs have been net sellers in cash to the tune of 3,007 crores, while DIIs have supported the markets as they have turned buyers to the tune of 1,158 crores. FII's long short ratio for index futures has dipped to 56%. Now, remember, friends, last week we were discussing that this ratio was at 65%, and this was helping Nifty to sustain at higher levels. Now, since last few days, we have seen FIIs selling index futures. This ratio has come down. It has weakened to 56%. So let us see what they have done in the internals of the data. Now, if we see index futures, FIIs have sold index futures to the tune of 11,348 contracts. They have sold stock futures closer to 8,548 contracts. On the options front, FIIs have bought 24,769 contracts of call options, but they have also bought 1,16,295 contracts of index puts. So it is almost 5 times of the quantum of the calls they have bought. They have bought 5 times the amount of index puts. So looking at this overall FII data in the derivatives segment, I feel that it is negative. And if we even recollect, Wednesday's data also was negative. So back to back 2 days of big negative data, we should be a bit cautious. So it is a scenario where I feel that FIIs are booking their long positions or trimming their long positions rather at higher levels, and buying of these 1,16,000 put options, uh, contracts of put options, is indicating that FIIs are expecting high volatility in the coming few days. So let's just be a bit cautious and not go overboard or not chase too many stocks at higher levels, or let us wait for the stocks to sustain, consolidate, and give us some kind of a proper reversal signs. So just to summarize, we expect the indices to retest key support level around 19,500 19,550 zone, and the resistance could be at 19,900 19,950, above which there could be, the index could turn positionally bullish and there could be some kind of a reversal pattern formed once again. And if we see bank nifty support would be around 44,000 and the resistance would be 45,000 45,100. And as I just mentioned that we need to be extremely selective in terms of stocks for the next few sessions. So, friends, that's all for today. Thank you all for regularly listening to our podcast, and we hope you are finding it useful for your trading decisions. Do tune in tomorrow for more market related updates and insights.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.